So our first idea is European value. The recovery is continuing in Europe. It's still very slow, but that has the benefit of keeping monetary policy extremely easy. And we think that that will tend to make the euro move lower, and that creates opportunities for some of the industrial companies in Germany and elsewhere that are sensitive to the exchange rate. In addition, we do believe that telecoms offers a very interesting opportunity. At the moment, there are many more large telecom companies in Europe than there are in the US, and the regulators finally seem to be willing to allow various mergers and consolidation, and we think that creates some good opportunities. Also, more generally, European small and mid-cap stocks offer value, and gradually we think the consumer stocks can benefit as the recovery slowly seeps through to the consumer. Well, our second idea is seeking equity alpha. And this is based around the idea that whereas last year stock markets most of them went up by a very large margin, this year we still see upside, but it's less than it was. And in particular, we think there's much more opportunity to outperform from sector, style, and stock selection, reflecting much lower correlations. How do you do that? You can invest, if you like, long-short strategies via hedge funds. You can invest via one of the pair trade strategies that we recommend, where we see stocks whose prices diverge and then tend to come back together again. Or for long-only investors, we have 20 for a generation, which is a group of stocks that we see really outperforming over the longer term. Or, of course, really any of the other specific ideas from within the top ideas universe. Well, our third idea is a new one, techs in focus. Now, the technology stocks both benefit from short-term cyclical effects as delayed investment catches up, but they also benefit from a number of very big structural themes. For example, big data, the explosion of smartphones. In addition, we can look to the whole robotics and automation area. And then there's the whole Internet of Things and wearable devices. Many interesting stock selections. Some of these stocks have already outperformed. We think there are baskets of stocks that can continue to show excellent performance in our view looking forward. So our fourth idea, emerging market reformers, cyclicals and dividends. Here we're bringing together a couple of our earlier ideas. We're still focusing on countries that reform. For example, India saw a very good run in the first half of the year on expectations of reform under the new government. The government's now in place. We think there is still some further upside, though not as much as there was. And we look to other countries that may introduce reforms as we go forward. Then there are cyclical effects. For example, Taiwan, perhaps to some extent Korea, benefiting from the worldwide pickup in the technology area. And then dividends. In the past, one tended to buy emerging stocks for the capital gain. Now, more and more, the return is coming from dividends, and we can identify some excellent opportunities, we believe, where the dividend payouts will give a handsome return. Idea number 5, cash-rich companies. This has actually proved one of our most popular ideas, and for a good reason, which is that some of our stock selections there have tended to outperform really quite handsomely against the general market. What's the story? The story is that with lots of cash on company balance sheets, M&A activity has picked up really quite dramatically, and we think that that can continue at a high level. And of course, that gives opportunities mainly among potential target companies, but sometimes also among the acquirers. On top of that, some of that cash is going to get returned to shareholders through special dividends or stock buybacks, which have also been running at a high level. And where we can identify companies where that isn't yet discounted in the price, again, we think there can be an opportunity. So idea number 6 is sustainability. This is another new idea for our top ideas. Of course, sustainability has been around for a long time as a theme, but we think it's particularly important now with some new technologies which do open up new opportunities. For example, energy efficient buildings. Buildings are one of the biggest sources of carbon emissions. There's lots of pressure to really make them efficient. Adaptability. Companies have to be smarter and smarter at adapting to a changing environment, whether it's dealing with issues like cybersecurity or some of the other fast-changing environment. And finally, resource efficiency, new materials, new ways of production processes. All of these areas we see opportunities, although some of the valuations are a bit stretched, so stock selection is crucial. So idea number 7, fixed income searching for yield. Clearly, this is a difficult moment for fixed income investors. Yields are low, in some cases pretty much at all-time lows. Credit spreads are also historically at close to low levels. So where are the opportunities? We think that there is particular value in selected areas, for example, some of the European bank subordinated debt. And for fixed income investors who are able to go a little bit further, some of the hybrid bonds issued by banks, so-called CoCos, and also hybrid bonds issued by corporates. We believe that these offer good risk-reward compared to many of those very tight spreads on conventional fixed income. And of course, as the year progresses, we'll update you as new opportunities come through.